Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers, doing a quick live stream here, just checking in on the roller coaster markets as usual. We had a nice week last week, or I did, as far as some of my stocks recovering many of their losses, not all of them. Still got a ways to go there. But now I feel like heading into this week, the negative momentum and the negative headlines are overpowering any bulls that are out there. So we'll look at some things and talk about what I'm calling a 50-50 market, like literally flip a coin on any given week and you're going to see a different tale from the bulls and the bears. And it's obviously can be confusing, right? And it can be a little bit nerve-wracking. I'm staying in the lane that I'm still bullish through the end of 2022, at least, certainly in the future as well. I believe that the world that we're in now, with the big QQQ stocks and the big tech stocks, where we still have a lot of innovation, we still have a lot of positives for us as investors over the medium to long term. In the micro short term, it's hard to really stand up and say that you can feel 100% bullish. However, I am taking the opportunity to buy when I can. I didn't buy a whole lot last week because the market was in an upcycle, and it was nice to make a little bit of returns on the stuff I have purchased in Q1. And it looks like this week we're going to have a Fed minutes tomorrow, which will, of course, bring all the experts on CNBC to talk interest rates and, housing crashes and everything else that they like to get into. So, gut feeling is this week is not going to be super positive. However, if you're a long-term investor, it could present some opportunities if we still see things melt down like they did today a little bit. So that's what we're talking about. What's going on? Call me now. She is 100% bullish, and I'm right there with you. I feel really, really good. I feel good about 2022. And what's going to be interesting that I think not a lot of people think about is we're down. Let me see. Let's flip over here for a second. Let's see where QQQ is right now for the year, just to pick one. All right, because this will show up better in a chart. All right, so here's your year-to-date on the Qs. January 3rd, you're at 401. Obviously, we had this low point of 318, and we bounced up here a little bit. But if you are just buying today, there's a chance that the QQQ, let's just say it goes flat for the year, okay? It would get up to $400, and that would be on whatever, December 31st. That's a pretty nice gain if you bought there, right? You bought a share at 361. You finished the year at 400. Everybody on television would say that the Qs were flat for the year, right? But in reality, you as an individual investor who bought a single share on today, you've actually done much better than that. So there's a lot of ways to think about it with these opportunities that are out there right now. And that's just a short-term freaking 8-month view of it. If the Qs got to flat, you could easily be in the camp of someone who had a 10 or 20% gain from today. So keep that in mind. You're going to hear, I believe that most stuff that's on TV is much more negative, and they want it to be negative for whatever reason in this stretch. But I think that if you're smart as an individual investor, you can make better gains than most people will see for the full year, because you can pick out these negative weeks, these negative days, these negative earnings reports. And if you believe in the company, you can get in, and all you need is a little bit of tailwind sometime before December 31st to actually hit the year better than any sort of index fund or let's just say professional investor might do. So don't feel bad when you hear people say that the Qs are down X percent or this thing's down X percent, right? It's more or less an opportunity as far as I'm concerned. All right, one thing I wanted to show or look at myself, I haven't even looked at this yet today, was our losers for the day. So today was, we finished minus 2.26%. Me, I mostly cover NASDAQ stocks. I mostly look at NASDAQ on this channel. But for the record, S&P was minus 1.2. Dow 30, not even a percent. And the poor Russell, who had actually started to make gains last week, or not gains, but started to bounce up. You know, it looks like it's in another downtrend, depending on what happens today. But there's if you have the stomach for it in the Russell, I mean, first of all, there's 2,000 stocks in there. But small caps right now, if you can afford to take a chance, that's where the big gains are right now, is in small caps. And it's going to take a market turnaround to pull them out of their rut. But there's a lot of value in small companies. Everyone would have their own picks out of 2,000 stocks, but I think that the second half of the year could be very good for small caps. All right, so I sorted this by market cap, and what we have, just eyeballing the percentage change to highlight the big, losers, if you will. Looks like Tesla had a rougher day than, obviously Amazon. I'm going to say that most of this is down 3%, just eyeballing this column. NVIDIA, which I love NVIDIA as a company, I'm not surprised that they are one of the top losers here at the 5%, just because, they recovered a lot of gains that I'm not necessarily sure that they weren't a little overvalued, right? Great company. They will do outstanding things for a long time. Just at 259, I'm not a buyer at that level. Alibaba was interesting to see because Chinese companies, in general Chinese tech stocks, they had been making a rebound. Now they're back down across the board today. I did buy into KWeb. I don't know if it was last week or the week before. I don't want to change the screen yet, but I sit around $32 in that one. ASML, so it looks like chips. If I'm going to put the 2 and 2 together, we got chip 1, chip 2, Broadcom -3, AMD that just had some good news come out about it. Well, it was a good appearance on CNBC by Lisa Su. Even they got hit. I love the price on AMD at 106 right now, particularly for the long term. I think it's a no-brainer. What else we got? Qualcomm, another chip, +5. Blackstone, what else is, so Piedmont Lithium, not one that I follow myself, but for whatever reason, it took a dump today. AMAT, another chip stock, so a lot of chips. NEO, what else we got in the 5s? Here's a 6% for Square. I'll have a fintech video very soon, but Square is a weird one as far as fair value goes, but I would say in general, fintech has opportunities for folks who are interested in holding long. I think the future of money is definitely going to be different. Companies like Square are right in the midst of that. Anything else big? Sea Limited had started to make another run up, and it took a step back today. 6% on Moderna. Something's going on with vaccines. I saw that news on SeekingAlpha. I don't have enough details to tell you, but we'll look at the headlines in a second. Marvell. So I see a lot of chips. I see a lot of chips that are leading this list of losers. Out of curiosity, let's try to figure out where the gains were today. I always sort by market cap, so we get the big dogs. Although not a lot of recognizable names here. And this is that 50-50 market, right? So it's painful that there's hardly anything up. It's like stocks are not moving independently, and that's the kind of thing that starts to drain on us as investors, right? So I don't know this company, but this Wind Systems is up 7% today. Why isn't, let's just say, Procter & Gamble up today? Why don't I see Exxon or something up today? There's no yin and yang to the system, and that's where the 50-50 part that I came on today with that title, 50-50 stock market, it's literally just across the board up, across the board down. Now, when gas prices were up, I didn't look at them today. Well, crude oil is down today, minus 2.74%, so maybe that's why Exxon didn't go. It's just stuff going down. And then on other days, like last week, it's just stuff going up across the board. So to me, it doesn't feel really like an investing that you have any type of, what's the word I'm looking for, advantage on the individual stock level, right? To come in, and I said Procter & Gamble earlier, or Berkshire Hathaway, or just picking something that's more conservative, you could have a complete bull case on those stocks that on a day like today, when tech and chips and the Qs are getting hit, you should see some life out of those stocks, but we're not seeing it. We just see complete sell-off and complete buy-in. And to me, that's a really weird place to be. And that's why days like last week and into this week, I'm just holding for a second. We're kind of in the middle. Today wasn't a crash. Today was just a pullback. But there's no incentive to buy. I have no belief that tomorrow couldn't be up again or down another 2%. Like, it's really hard to find the direction. And so for me, it's been hard to navigate, and I just try to put it into perspective of valuation whenever I can. I have stuff on my list that when it hits certain points that I will buy into, but we're not at any sort of low point right now, right? So I would buy more PayPal, for example. People ask me that all the time because obviously it's my number one holding. Yes, I would buy more PayPal, not at 118 or 113 or whatever it is today. That's not a reason to get excited. So I don't know. Let me know what you guys are up to. John Spencer's here. He says, yesterday NASDAQ was up 2%. Today it's down 2%. And that's that 50-50 market. It's hard to get excited one way or the other, right? Like, you're not getting rich, certainly, and it's not low enough to buy anything. Lion says, I see stagflation being more plausible than a recession. All these Wall Street clowns talking about yields signaling a recession just want our shares. I agree with that in the sense that it's almost a persuasive negativity. Let's go look at the headlines on CNBC. I haven't been there today. They always have I like CNBC as a television station to have on in the background, but they definitely love the fear. I would say Market, is it Market Watch? Market Watch, if I'm thinking of the right one, is right there with them in terms of negativity sells. And then we always have the reason why here, front and center, as investors fear the Fed rate hikes will slow the economy. I mean, they must have 25 of these interest rate headlines that they just spin in and out. 10-year Treasury hits 2022 high, speedy tightening. There is a Fed minutes, I think, that comes out tomorrow. I don't know if Jerome Powell actually comes out and does a press release about that, though. I think it's just released, and then all the figureheads get to look into it. We've got the Russia thing, which makes sense. I don't know how much time Russia has to survive from a financial perspective. They got more stuff coming. 30-year mortgage, 5%. The housing sector is obviously a chief negative headline that you see everywhere. My take on that, by the way, so as far as I'm concerned on housing, I will absolutely go on the record and say I do not foresee a housing crash, housing value crash. That doesn't mean that prices can't go backwards, 3%, 5%, maybe something like that as interest rates come up. But I just don't see anything like we saw back in the housing or the mortgage crisis. I see nothing close to that because at the end of the day, and you guys already know this, demand is everything, right? Let's stop on real estate for a second. Let's talk about stocks. Nothing sends a stock to the moon faster than a headline that says demand. You make the XYZ widget, everybody wants one, your stock soars ahead of time, okay? What do we think is happening with housing? Yes, the prices are going up, and that is concerning in terms of the American dream, but they're also not staying on the market very long. So people are buying them, and I guess the only argument you could ever make about a housing crash that I think is plausible is the fact that you're paying a lot for a house, and then if something were to happen with jobs or America's income came down, they could be at risk of losing that house. I might be able to see that, but I would say those warning signs are not on the table right now. I don't think they're even close. And as a matter of fact, if you take out, let's just call it California, which I don't know who's trying to move to California, but we know they have expensive houses. And then we'll just say New York or Texas or whatever those big three are. Take those out of the market. I live in Ohio, and in the Midwest, in Cincinnati, Ohio, just even inside the city limits, but in a different like suburban community, there's no shortage of demand for the houses in my neighborhood, and they're not $1 million homes. Okay, they have gone up a lot, but I think my house right now is a modest house. It's like $400,000, which is way more than I bought it for in 2008. However, it's still technically affordable for two people who have or two income household with kids, okay? So I don't foresee, certainly in my neighborhood, and I would say Cincinnati as a whole, I don't foresee the housing prices, while they've been a boon for me, I don't see them as being unobtainable. Now, California, if the rumors that I see are true, that it's $1.5 million or something stupid for a 3-bedroom house, okay, that makes sense. But that's 1 out of 50 states, okay? Austin, Texas, I know, is on fire. They might be up to something similar to that. Maybe it's $1 million for a 4 or 5 bedroom or something bigger down in Texas. But I could see some sustainability problems at that level. But not in the Midwest. I mean, and the Midwest is a lot of things. It is Pennsylvania, okay? It does include things like, obviously, Indiana, but Illinois. Illinois has Chicago, right? Michigan is a much bigger state than people think about. And I know, all jokes aside about Detroit, that's a big city area, rural area, okay? You get into the Wisconsins, the Kansas, that kind of thing. That is where a lot of people live, is what I'm getting at. And I just can't imagine that those prices drop significantly. Like I said, 3 to 5%, fine. That kind of makes up maybe for interest rates going up, but minus 20%, minus 30%, no way is that a concern right now where I live. I'm just going to say that. And I'm in America, right? America, USA, probably where the bulk of real world people live, as opposed to millionaires and such that may have enough money to pull it off in California. All right, Lion is here. He's talking about earnings. Yes, late part of April. I'm starting to feel like I'm not going to buy anything in the stock market until earnings. Let's take a look. I forget who normally comes out. I guess it's banks. I randomly picked NVIDIA here, but I was looking for an earnings date. Actually, I'm going to switch to Yahoo because their earnings dates are more clear. How about Bank of America? We know banks go first. I assume that this will be one of them. That's ex-dividend, April 18th. Okay, so that's banks. The 18th is going to be 7/12. That's going to be a Monday. So that means the next week, April 25th, we will start to get a couple FANGs, Netflix maybe. Netflix is usually earlier than some of the others. Oh crap, they're April 19th. So Lion's right, it's coming right up on us. No date announced for Google. What about Facebook? April 27th. So yes, so if you take Facebook and you say 3 weeks or so from today, I don't know that I have too much interest in buying anything before earnings with this 50-50 market that I've been talking about. It just feels like there could be a lot of negativity come out around that time because we're itching for it. And why fight the system? Let's see where Amazon is, April 27th. Okay. All right, we got Derek here. 1 second, let me switch over. Derek says, if you're getting a 30-year loan, price of a house is irrelevant. It's a good point. Interest is low, price is low, blah, 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 blah. Unless you're paying cash, it's all a wash. And the other part of that, which, I agree with Derek, but the other part of that is too, take the fact that I bought in 2008, and how much my houses went up in value. And let's go ahead and take, I think I bought, so if it's worth 400 today in an inflated market, let's just shave 10% off of that and say it's worth 360, which I would never do, but let's just pretend. I bought it in 2005, late 2005, right around Halloween, 2008, right around Halloween, for $250,000. So without doing all the math, just from an appreciation standpoint, on a conservative estimate, our family's up 100 grand just by paying our rent, right, our mortgage for that time and living in it and using it. So for all the people that are out there today with younger families or need a different housing situation, I know that in 2008, I wasn't super duper pumped about 250,000. It was a step up for us, but you get comfortable with it for that first year or two, and the rest starts to make a ton of sense, especially when you're living there. Now, I don't know anything about investment real estate, but I can tell you that for us, even with repairs and mortgage and whatever, it has been a good investment, not only on the return of the value, but the value that we've received by living there, right? And the kids go to schools, and it's made life more enjoyable, let's put it that way. So there's a lot that goes into a house, and if you are not, let's just say if you're not married, you don't understand the pressure, especially when it comes time for kids, because a lot of, at least my wife, is very interested in what schools have to offer, what the kids are doing in the neighborhood. Like, you can solve a lot of problems by having a house that your family is happy with, instead of listening to a lot of yapping about what they're not happy with. All right, you're up 100K, but you sell it at 400K, you're gonna buy the next one. And this is true, this is like the used, so this is Derek Ridlin. Derek, it's exactly like the used car valuation phenomenon, right? Like, I can take our Chevy Tahoe in tomorrow and sell it for very roughly, I think it's $5 grand off what I paid for it 2 years ago. So I'd lose $5 grand, right? But I drove the car for 2 years. But what am I going to buy? I'm going to buy something else that's just as inflated. So it's funny money. It's not real. I would get a check conceivably for the difference between what I've paid on the loan and what they've given me for the car, but I got to roll that money into something else. I have 3 kids. I can't not drive a car, and I'm sure shit not driving a 2001 Nissan Sentra with 600,000 miles on it. First of all, my family won't even fit in that. And second, I'm too old to have a car that breaks down every 5 miles. So it is, and the housing thing is the same way. If I was in a position right now where we needed a bigger house for XYZ reasons, I'd be happy when I sold mine, and I would be upset when I bought the next one, because everything I made on mine would just be paying the premium on the next house, because for us anyway, we like our neighborhood and we would stay there and want the kids to stay in the same school. The only way you can beat that system is to go cheaper, right? Sell yours for the premium, car, house, Pokemon cards, baseball cards, whatever you've made a ton of money off of in funny money in COVID, you have to take that money and go downwards. What's not upgrade, downgrade. So you know, in my case, if I want to do it with the house, I could either go live out in way rural, where the kids are, I don't know what, the school system is in like a rural part of Ohio, but we could probably find a $250,000 house in rural Ohio that's very nice and much bigger, but it wouldn't have the same amenities from a community standpoint. So would that really be worth it? If I took the Tahoe money and bought the Sentra that I mentioned, yeah, I'd have the Tahoe money, but now I'm miserable driving around and keeping that cash. It just doesn't make sense. So funny money has a tendency to work itself out, and I do not expect my house necessarily to be worth more at the end of this year. If it's 400 a day, I would expect it to be very close to the same, if not dripping back into the 390s by Christmas time. And that's okay. It's okay, because I'm not moving. So I never counted that money anyway. All right. DH is here talking about natural gas tickers like SWN and BTU. I will put them on the board. Just 1 second here. Push all my buttons. Okay. BTU is easy enough to remember. Let's start there. Peabody Energy. And I have heard that natural gas is, during this war period, natural gas has come up as, I know it's a stickler for Germany and stuff buying it from Russia, but I've learned a little bit more about its use case as a alternative to some other fuels. It's definitely interesting. Looks like it's made a run here. No surprise with gas prices going up. It was $11.34. You're at $24.99. You got strong buys across the SeekingAlpha ratings. Valuation at a C+. Take a look at that in a second. Momentum, and this is probably where you're seeing this thing in the news, but wow, forward PE of under 5, EPS of 7. Now, since this is natural resources, we're going to use this peers tab that is automatically updated. So to be fair, I do not know these companies. You had SWN. Let's do something here. Take this one out and put in SWN. All right. And then let's go to valuation to see if these all trade in the same world. Let's try a gap PE going forward. BTU under 3 on the chart or the table view. Arch is there. So I'm definitely speaking out of something I don't understand, but Arch is there, PE gap, the trailing 12 months. Looks like Arch, not on price to sales. These two look like they're pretty close to each other. SWN, not that it's a bad stock, but it is trading a little bit higher. But it does have a PEG ratio, so I don't know, I'm just eyeballing really quick. Let's take a look at growth rates. Revenue growth for 2022. Now SWN is leading that category outside of this one, but 44% versus BTU's got 8%. How about EPS growth diluted? I don't know why that didn't populate for this one. Free cash flow. Got some negatives here, so you'd have to look at that a little bit more closely. They might have, built a new pipeline. I have no idea. CEIX is presumably the leader, but there's a lot of NAs to look through. Gross profit margin, SWN wins. Shares outstanding, SWN has a lot more. That doesn't necessarily matter when we look at earnings per share. Yeah. And then this is recent performance. So 1 month across the board, SWN up 38%, BTU actually down. And then on the 3-year view, SWN's been down 10%. So I don't know. Interesting. If I had to pick one just by me going through this, interesting that Arch has a 36% short interest, because I would have been inclined to say that these two were the most intriguing to me, but I can understand DH's, there's definitely some numbers in this SWN name that are intriguing. So I don't know if I'll be much into buying into energy, but I appreciate you sharing that. What did we get here? U.S. natural gas prices trade above 6 on drop in U.S. production. So this is the crap that you have to follow if you're going to play this game, and I just don't follow it. I mean, I look at crude oil prices every day just because they're sitting right up here on Amazon. Or not Amazon, of Yahoo, but I wouldn't say that they do a whole lot for my sentiment of the day. And I guess just for me on energy stocks like this that are tied to a commodity, I'm just nervous of what the short term can do. Are these inflated prices sustainable or what? What happens when the war ends? That's the thing. No one knows for sure. Let's check out our latest news here. Analog devices. Actually, let me just get to top headlines, top news. NASDAQ down. Warner Media guys leaving. Elon Musk and Twitter. That should be an interesting circus act. I don't know if Twitter is salvageable, just to be honest with you. And I'm on it. I use it. I read through Twitter every night, half for entertainment, half to catch up on things. But it is a rough place. I don't know what Unity's doing here. Senators urge FTC to review Microsoft, Activision. Man, Activision, they had some walkout or something. I just don't know what's going on with that company. Facebook paying GOP firm to campaign against TikTok. That's interesting. Apple, Microsoft, Amazon, who cares? Five Below tripling its store count by 2025. I don't know if that's super smart in this era. However, that I would assume on the same token that their stores must be doing well as individual units. Lululemon bouncing back. I think that's about it. There's a lot of talk about iPhone, Apple production cutting. I've seen conflicting reports, but this one comes from Nikkei Asia, which I think is their primary news source, if I remember correctly. Apple's cutting 20% of iPhone SE output. They're also reportedly reduced orders for AirPods by more than 10 million. Apple shares slipped less than 1%. There is, let me see if it's in here. Apple, yeah, maybe this is it. Apple has asked suppliers to make a couple million fewer units of iPhone 13, but noted that was due to seasonal demand. What I had read somewhere, just to skip ahead to the point, was that not that the iPhone SE was a failure, but they found that consumer preferences are leaning much harder towards the 13, and the fact that it's bigger with more camera facilities to it. And I think I read on a tech website somewhere that just in general, smaller phones are just falling out of favor. People want the whole deal. They want, the whole computer in their pocket. Can't always get that with the smaller phones. It is worth following though on Apple, which to me has climbed above its fair value slightly. We talk about it all the time on this channel. I would never bet against them. But it'll be interesting to see if we see any shift in their share price. All right, Lion says real estate is the best investing tool. Tax benefits, yep, you own a tangible asset. Derek says him and his fiance are going through the same housing scenarios. It's all interesting. It is. And what's more interesting if you're getting married soon, Derek, is the concept of which house do you buy, right? If you don't have kids, whether through the marriage or you haven't started your own family yet, do you need the family house yet, right? Or can you wait? And then if you do wait, what happens? You would conceivably wait with the understanding that housing prices are too high right now. Right? But then if you wait 3-5 years and let's say you get a condominium or something that you don't necessarily, not your favorite pick, I think it's safe to say that the 4-bedroom family house that's perfect right now will probably cost more in 3 to 5 years, regardless of interest rates, etc. So it's an interesting chapter in your life. You'll have to let us know which way you end up on it. And Lion and DH are going to live on a farm in a huge mansion in Texas. Jeez. Well, then that's going to be the headquarters for the 40 Finance Conference that I just made up a second ago this summer. Jeff, do you have any opinions on which neighborhoods in Cincinnati you like? I love East Side. I've always lived on the East Side. So I grew up in Columbus, right in the backdrop of OSU. That was like my childhood. Grew up in the city. And when I came down to Cincinnati to go to UC, mostly because I lived in the backdrop of OSU for 18 years, so I decided, just to get 2 hours away from home. Obviously, I lived in campus, so kind of Clifton area for school time. And then I moved out to Oakley after school. And then, let's see, Oakley, I had a couple places in Oakley Hyde Park, which is great, but it's on the same token, I think it's a little overpriced for what it is. But, everybody has their own opinion. Particularly Hyde Park, I think, is super expensive. Then we went and bought our first house in Norwood, which was a lot more affordable. But the city isn't super well run, and we always knew that our first house was not going to be the school-aged house. Okay, so we bought like an $80,000 house that was like 100 years old, and it was perfect. It was perfect for when we were newly married, and we still did stuff with friends and whatnot. But then I moved out into Kenwood area for the when my first son got close to school age to take advantage of schools and whatnot. So I'm big on the east side, not east side like Eastgate, but I like anything that's, Kenwood, Blue Ash, Sycamore. They're all a big clump out here. And I will say that I have never once wished that I lived on a different side of town, only because there's tons of nice stuff for the kids to do. You got Kenwood Mall, which is one of the last malls that is worth a shit here in Cincinnati. Family activities, it doesn't really matter, whatever church you're into, school options, there's a zillion of everything out here. So that's my 2 cents. I would definitely look around, at least tour some of the neighborhoods. My dad always used to say, when you're buying a house, which I actually did this, I don't think you have a concern out here, but he always says, make sure you drive by your neighborhood at night just to see what the activity is, make sure that the streets are well lit, make sure there's no crackheads out there and stuff like that. It wasn't really like a crackhead concern out here, but when I did that for the house we live in now, a few times, I would drive up after work and just drive through, and there's nothing but kids playing, dad's having beers and mowing the lawn, so it's worked out pretty well. All right. Lion says, I hope Elon removed the ban of Trump. Wouldn't that be hilarious? I don't know if he can, but that would be hilarious and probably the highest immediate revenue thing that he could do for Twitter in terms of ad revenue and eyeballs. I mean, that's one button that if you push that, regardless of your feelings, that would add revenue to the bottom line immediately. Derek's in Mount Lookout now, near Hyde Park. Yep. So the only thing you got to think about there, Derek, in Mount Lookout, Hyde Park, is what you're going to, if you buy a forever house, you have to think about what you're going to do with schools, because your CPS, Cincinnati Public, for almost all those neighborhoods, which isn't necessarily a bad thing, but is that okay with you? And then if not, you're looking at private/Catholic schools, which is going to add, quite a big chunk to your bottom line every year. So something to keep in mind, I guess. All right. Well, with that, guys, I think it's almost 5 o'clock. I'm about to head out, but I just wanted to check in and say hi to everybody. Hopefully you're doing good. Just a quick recap for me. Probably not going to buy anything for a couple weeks. We'll see what this Fed notes meeting is, but I feel like the prices, I think we've lost some momentum to the upside that we had through all of last week, and now it wouldn't surprise me if we're just in a stalemate for a couple weeks, maybe until earnings, right? So to me, I don't think there's a lot of incentive to buy your favorite stocks until you hear from earnings. There's not a lot of stuff that's going parabolic by any stretch of the imagination. So that's my take anyway. So hopefully it helps. It's good to see everybody. Thanks for coming out, and I'll see you on the next video.